Okay, there may be another situation where AMC could be signaling strength to GME just like we saw the last time and then GME went up. This time it has to do with some major candle closures and some very positive upside probabilities based on candle formations. Let's pop open the hood for a look into price. Welcome back to the channel on this Super Saturday. This is ARCa and let's grab some popcorn. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive, right? So let's go ahead and take a look at AMC here. This is the 4-hour chart, something that we've been looking at for a while now. This is, if you remember, right, last week, we were identifying this formation as being a bullish wolf, right? So this wolf is actually presented when price action fails the bottom regression, right? Just like down here. Now, we identified that area of $4.33 simply by looking at the monthly closing candle, right? Prior to the one that we just closed on Friday. And we noticed that that valuation had $4.33 and price action was headed down that way. And that's how we were able to identify that, right? With the confluence of other candles as well. So if you actually just take a look right up here where that arrow is, you're going to notice the L there on the OHLC, which is your open, high, low, close. It landed directly on that 433 bottom. And I will say this, many of the ARCa Bulls trading team members longed that 433 and are presently in the money at $4.98 as we speak, right? So pretty nice, and congratulations to those who took advantage of that, right? So let's go back here to this chart and identify the probabilities here, right? So usually when you play the wolf formation, it definitely has it definitely has a connection between the wave number 1 and wave number 4 regression, right? So if we were to identify upside probabilities on this, it's showing that we could be looking at these numbers here. I'm not saying that it's going there, but I am saying that that's how to play the formation, right? And so far from our entry, pretty damn good, right? So we're looking at a potential 524 to 531, and then if even possible, 545 to 554, right? Super huge numbers out here. And I will say that if we're looking at Bollinger Bands, right, or if we're looking at volatility bands, then you can actually see here on my algorithm that $5.24, 52495 is the upper band of the 2 standard deviation multiplier, perfectly at that number, right? Super cool. And another thing is that we are also getting a daily ATR top value of $5.24, right? So interesting that we're getting some of these targets to rhyme that tightly. Very cool. Anyway, so let's go ahead and now pop open the next chart here, right? Because I do have something to show you. And this is actually, you know, for AMC, we're going to be, this is called the Skittles chart. So we're going to try to do this Skittles on one thread, right? Because the Jolly Ranchers for GME, we couldn't actually nail it on one video. So we're going to follow up with that one tomorrow. So let's see if we can kind of go over the probabilities here for AMC, because it is signaling an upside with high percentages in probabilities. Okay, guys. So this is why I'm putting together a little bit of a special here for both AMC and GME. So let's go ahead and pop open the Skittles charts, right? And this is the average daily return after the semi-annual close week 1, right? So the Monday coming up usually has a return positive, right? So 0.45%. And these are the calculations to the for the days moving forward. Now, the average weekly returns after the semi-annual close, this is week 2 and this is week 3. So on average, it looks like we have a bullish 1, 2, and 3 weeks coming in, specifically the 3rd week after the semi-annual close. And what do I mean by the semi-annual close? Well, that's something that not a lot of people are talking about, right? So just on Friday, the Friday session signaled a macro closure. We actually got the weekly close, the bi-weekly close. And what I mean by that is, like, you know, the weekly candle chart, it gives you on average a week to, you know, from the birth to close of that candle. So we closed the week, the bi-weekly. We also closed the monthly, the bi-monthly, the quarterly being the 3-month, and the semi-annual close being the 6-month candle. So all of those closures just came in on Friday, right? So this is why I'm speaking to you like this. We have to go over the probabilities here and then go over what happens typically after these macro closures. And that's why we're here with the ARCa Bulls trading team, right? So let's go ahead and pull back here to the previous chart and the Skittles chart, right? So yes, we do have on average a pretty nice return, specifically on that week 3 for some odd reason, right? So now for those of you who are curious about how many weekly iterations there have been after the semi-annual close, throughout its entire trading history, then this is it. And what I'm doing here is the retracement to the 50% value of the prior bar, right? So it looks like none of these here, this is the bearish retracement, right? So meaning that if it closed bearish, then the retracement would be to the upside 50% of the prior bar, right? So meaning that it's like this, right? So imagine we closed this candle here. We'll color it slightly red, right? And this was the weekly candle, right? So that would mean that it opened down here and it closed down here. That would mean that the next candle would typically retrace to the 50% valuation of the prior bar, right? This one being green now. And then there could be a continuation to the downside or a break of the 50% and continuation to the upside. So that's what I mean by bearish retracements, right? And now the bullish retracements would be quite the opposite, right? So meaning that we printed from the opening down here a bullish candle, right? So it opened here and it continued on to the upside, to the upside, to the upside, and it closed up here, right? Now that would mean that we would get a retracement to the prior bar's 50%. So if we had a bullish close on that weekly candle, then we would retrace to the 50% and decide if we're going to break that 50% for a continuation to the downside or bounce from that and continue to the upside, right? So this is the count of the candle closures that just happened: weekly, bi-weekly, monthly, bi-monthly, quarterly, and semi-annual. So, and that's specifically to the 50% valuation of the prior bar. So yeah, we have very little results in there. So I actually didn't really consider this too much for our analysis. I just wanted to show you right there because it did kind of, it was a fair bit of analysis performed here in order for us to gain these probabilities here. So now we know that the probabilities are probably not likely for a 50% retrace of these specific candles, right? That's a great thing. Now let's go ahead and move on to the next Skittles chart and identify something here. The only reason I had this up here was because I wanted to show you that the prior month, which is the one that, this is the May month, and this is the June, the one that we just, that we're about to close, or we just closed, right? So the closing valuation of that prior month was $4.33. Now what happened here is that price action essentially went up to meet its 50% of the prior bar retrace, the month that we were just on. And that's exactly what happened. We opened up right about here at $5.43 and we went up, 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 up. And if you measure that total top side of the prior bar here, right? And this is the bottom side right down here at the bottom wick. You can see that that top side valuation would have been just about $5.80. Price action itself went up to a high of $5.96 using the H, right? So yeah, and then guess what? It retraced and it came back down to that 433. And now we bounced and we're sitting at 498. So this is what I mean by retracements of the 50%, right? But now guys, on to the really, really exciting news here, right? So I want to remind you over how time cascades here, right? So we usually observe a more immediate short-term time frame to cascade or domino effect into the larger ones, because that's usually how it works, right? Physics. So, apologize about that. Okay. So what I'm trying to say is that if we look at the weekly time frame, we're going to notice here a very, very, very freaking fucking bullish close, man. Damn. Look at this. This is a bullish engulfing candle iteration. Okay. This is your green body engulfing the prior red body. Okay. Now, yes, we did get the close on this guy, right? That means that we potentially get a 50% retrace, which could be around the areas of around 470. It's all good, right? But yes, now I've already calculated the probabilities of this structure, the bullish engulfing candle formation for AMC in general. So I back tested this, and here are the results, man. Okay. So we have 38 total iterations of bullish engulfings printed on the weekly time frame of AMC, and there are well, at some point this is gonna fucking change, so relax. Okay. There are 0 iterations that have been incorrect. So meaning that all of the 38 iterations of bullish engulfings on AMC's weekly chart have led to upsides from the close of it into the opening of the next candle. That gives us a 100% upside accuracy with an average upside thrust, or your mean, of 22.48% to the upside over the span of the next 2.63 days on average. Okay? So I did calculate. Now, just to remember, these are statistics. They're not certainties, okay? These are just the probabilities. I'm a data trader, okay? So I trade based on numbers. You guys should already know that for those of you who follow me, right? So, okay, the next thing to talk about here, I calculated the standard deviation based on the 22.48% upside thrust. So that means that from the firing of the signal, there could be a 29.21% deviation in price. So that means that we could, let's just say, for example, that we opened up at 498. Well, there could certainly be a 29.21% decline, right? So that's the max amount of the probability, right? So if we were to face something of that nature, then, price action at its max retrace would land somewhere around 353. Which is matching to the low of this area here, which in reality wouldn't be, I'm not saying that we're going there. In fact, I don't even think that we are because of several reasons. I mean, inflection, first of all, is down here on the weekly. It's at 411. I guess the only reason why I would think that there could be a reason there is because there's going to be some crazy negative catalyst or something. We have this bottom of the wick down here. We have this gap right here. And that gap at the bottom, seems to be around 326, and the gap top would be around 353, and the price action is leading to 353. So this 353 is perfectly in line with the opening valuation. Actually, is 352 of this gap here. Okay, so it does line up in some way, and it wouldn't be the end of the world because if you get rid of the drawings here, this being a huge inverse head and shoulders would still be a massive bullish formation, a candle cluster that has a target, it has a target of about, if it's really, hold on, it looks like it's signaling towards it, right? But that's actually the wick. Let's just calculate this stupid freaking target for now, and I'll give it to you, right? Just because I know people are going to ask me in the comments, like, ARCa, what the heck is the damn target on that bullish engulfing, blah, 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 right? So, yeah. I guess it would be around $11. So that's funny is that, the wick was already suggesting that potential. So yeah, it's around $11 if we get the top side of this bullish engulfing figured, right? So, and you know what? I guess I'll also keep, it's 11.05, right? So I'll keep the receipts on here just in case. All right. So now I know that this is probably a little weird to see because of the color selection, right? So what we could do is just, change it to something a little bit, more neutral. Okay. Yeah. So yes, we have a pretty big probability here that the bullish engulfing on a weekly takes us there, right? So the standard deviation we already know and why it could happen based on just confluence, based on the wick low here, the gap top here, and whatever else. Remember now, right? The reason why I'm thinking that it wouldn't happen is because of this inflection zone down here at $4. And what's the low of that? 410. Okay, so let's just go ahead and note that 410 down there, and we'll leave it just like this here, and also title it inflection, right? So this would be the pivot point. So usually price action tends to bounce from pivot points towards an upside. Okay, now here's the next thing. I did calculate the upper and lower bounds of the first standard deviation. So that means that we get now further data. So in case price action combats the top side of 22.48% and the top side of the reversion of 29.21%, meaning that yes, it can go 29.21 down, but that means that the standard deviation can also be used for an upside as well. So we have $7.09, which just so happens to be very much in line with the supports right back here. Nice, right? Okay, that's what the first standard deviation would do. In case we beat these targets, we have now further upside targets to evaluate, okay? And this is all based on just saying that we opened at 498, right? So let's go ahead and now measure that 498 to the upper bound of the first standard deviation being a 43.69% upside, okay? So a 43, oh, you know what? I'm sorry. I'm going to have to go ahead and I have to adjust that topside target, okay? The standard deviation, because I noticed that it's measured differently. So in fact, this would be the confluence of that bottom side. This one here would not, because math doesn't work to the downside the same way, right? You can see here that it's minus 29.26%, but if we increased 29.26%, it's going to be way lower, right? So let's go ahead and say from that 498, 29.21%, right? So let's go right over here. You see what I mean? It's actually just a little bit lower. Okay, that should be good. $6.45, right? So that's actually what we're looking at there. And it's all good. So yeah, we have the upper bound of the 43.72. Now, what's cool is that it also gives us a tighter range for a decline. Okay, so yeah, we're getting a minus 14.72 lower bound of the first standard deviation. So that means that we can now determine how low we can go based on statistics with a tighter range. So let's calculate here the 14%. It's 14.72, right? So let's go ahead. We're almost there, and take a look at that. We were already observing here that we wouldn't pass inflection at $4.10. And this is actually confluent to the bottom at 426. It's confluent to, or 424, sorry, is confluent to the bottom of the 433 that we just faced before continuing to the upside. Very, very freaking cool information here. Okay, you guys? So now we know what the potentials to the upside could be based on several formations. But I did backtest that bullish engulfing candle formation here. Okay? And these, of course, I'm going to go ahead and provide them for you, right? I'm not going to leave you hanging. So this is your target number one based on the standard deviation, 29.21%, right? Your upper bound of the first standard deviation is around $7 and about, I guess, 16 cents, right? And your 22.48%, we never calculated, so let's just put it down there right now. So 22.48% would take you right about here, around $6.10. So we have that range between 610 and 646, right? So very, very nice. And that's statistically speaking, guys, okay? So $6.46 just happens to be the bottom side of this range right in here, right? And that gives us about a 50% range to kind of play with. And this being the $6.10 to that bottom of the range right here puts us pretty much right at the puts us right at that 646, almost right at the very bottom side, split between the two of them. Yeah. So I do think that this could be the range right in this pocket here. Okay, guys. So I'm going to leave the prices in here for you. Of course, we're going to be a little more, concise about this as we move forward. But yeah, that's currently what I'm observing for price moving forward. And now some further notes, right? The average weekly return for the fourth week of June is 8.97%. And now if we look at that return, it looks like we performed 10.92% out of the average 8.97. So that was already pretty damn close. Not bad. And check this out. 65.79% of the time, price makes a new high on the weekly time frame after the bullish engulfing candle iteration closes. So not only is it suggesting an upside, but it's also telling you that it's almost 66% probabilities that it makes a new higher high after the weekly close on a bullish engulfing. I definitely went through the ringer here for this analysis, guys. I hope it does help you out. I hope it does give you some edge, right? But please remember that at some point here, we're going to definitely stop the memberships, the Lifeline memberships. Please remember to join. We're trading the financial markets together. And I will say that this last week has been an opportunity for the new trading team members to see hundreds and hundreds of percents of gains trading alongside myself and some other talented traders. So please go ahead and consider that. And also, guys, I guess I'm still extending a hand out there to whoever is still interested in the ArcMastersCourse 5-week mentorship program for beginners, traders, and charting. Okay, so make sure to get in touch with me and make a change to your career in trading. ArcMastersCourse at Gmail. Okay, you guys, I appreciate you for watching, and I hope you have a great rest of your week or weekend. All right, team, peace out. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and or day, and I'll catch you at the bell on Monday. Adios.